signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. Very important. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. So if you do have any questions that I can't answer, Rory will be the guy at Right Line who would be your contact. He's at 786-732-4656, or you can just put your name and number or your Skype username in the chat box or in the question box, and he'll pick it up and he'll give you a call as soon as he can to follow up. We'll have a lot of folks probably wanting to do that, so give him a break, give him a little bit of time to follow up. All right, this is just a graphic. This is called the SPY Super System Explained. The SPY Super System is a piece of software, and it's also a methodology, but it's a piece of software that identifies institutional money flow. This is critical to our trading success, is to trade with the institutions when they're trading and not be trading when they're not trading. And I'll show you how we do that. And this is a graphic of the Thinkorswim platform with the SPY Super System on that platform. I'll show you plenty of those slides. This is what the text alert service looks like. It's basically a text that comes to your phone. When I find a high probability trade that's going to be alerted to, I send it out. I'm on the alert service, so I know how quick they make it. I get them in about 10 to 15 seconds from when the alerts go out, and they'll come up on your phone, and then you can trade off of those. All right, we'll go into more detail about the alert service a little bit deeper into the presentation here. All right, first thing I'd cover this every webinar I take, and so if you've listened to me before, I apologize for the redundancy, but a lot of people don't know this. And again, it's very important to understand that the most important thing about trading is to understand what the market's doing, what's driving the market. The market drives about 75% of all the stock movement in most stocks, and we want to know what makes up what's moving that market. Now, these little marbles here, these are retail traders such as myself and mostly everybody here, I imagine. And it's important to understand that we're retail traders. This is the institutions, and I'm going to go into detail on these. When we are trading without the institutions, if retail traders are doing most of the trading and the institutions don't have a direction in the market, they're in their trading, but they're not trading in conjunction with each other. There's some going long, some going short. When that's happening and we're just trading against other retail traders, what you get is a lot of chop and a lot of chaos in the market, and you just get chopped to bits. There's no trend to follow. It's not a good time to be trading. And when this is the situation, we don't want to be in the market. We don't want to be in trading. We want to skip. That's why being patient is important. Now the institutions, when they decide they're going to get into the trades, now this is a different story. The institutions are, as probably everybody knows, investment banks. Goldman Sachs, JP Morgan Chase, Wells Fargo, HSBC, lots and lots of investment banks who have billions and billions of dollars to invest and trade. They also have trade desks with humans at them. That's the small part of them. Most of their trades are coming from what's called algos, or computerized programs that have been coded to trade for under specific conditions and setups. And that's what's driving the market. Now, it isn't just investment banks, it's hedge funds. The hedge funds also participate in these with billions of dollars. So do pension funds like state pension funds, firemen's pension funds, policemen pension funds, all these huge pension funds. Again, massive amounts of money that they have to invest and trade. And lastly would be the mutual funds. Vanguard, T. Rowe Price, two big ones. They have billions and billions of dollars to trade and invest. What our job as retail traders is to identify when the institutions are trading enough volume, and also enough of them are trading in a stock in the same direction that we can identify that and follow them. That's all we're going to try to do, is follow them into the market, and and those are the trades we want to be in. If they're not driving a stock or an index up or down, we don't want to be in it. We just want to be out watching. All right. So that's what makes the market move. That's for us to identify, and that's what helps so much to find high probability trades. Now, in the room, I have a couple of rules to trade by. Pretty simple. We trade the best and skip the rest. That means only trade the highest probability trade setups we can find, and we have specific criteria for that. Skip the rest means this is that. Don't be trading when there isn't a good setup. And this seems obvious, right? But listen, I've been trading a long time, and I know a lot of retail traders, and I know retail traders, when they've been sitting at their computer for an hour and they haven't made a trade, guess what they do? They look for anything to trade. I got to be trading something. I'm a trader. I'm going to start trading. And the skip the rest goes out the window, and trade the best is out the window. They're just trading, and this is where they get chopped to bits. Second thing is, our objective is not to make trades. Our objective is to make money. This goes hand in hand with what we just said here. All right, we only want to trade the very best trades. Keep in mind what your objective is. It's not to make 5 or 10 trades a day. It's to make money every day, and you have to trade the best way you can in order to make money. If you're just making trades, it's going to be very, very detrimental to your financial account. The two other rules, or at least criteria, that we go by is maintain discipline. Now, when I say maintain discipline, what I mean is we have specific strategies that we follow in the room. Quite a few of them, but we have specific strategies that we follow. All right, for day trading, for swing trading. Maintain discipline means don't take trades that don't meet the criteria that we've defined for high probability trades. That's being disciplined, not just jumping around and taking any kind of a trade. And the second thing is to remain patient. Probably the most difficult thing for a retail trader to do is to remain patient with the market chops. When the market we traded the market yesterday. If you were in the market yesterday, I didn't make one trade yesterday. I might have made one trade, but there was very, very few trades. I didn't send out any trades yesterday. Nothing. It was just I did send out one at the end of the day, but that was off of a specific conditions. But basically, remaining patient means there's not going to be an awful lot of trades. We're going to have days where your better result is not to trade at all, and sit back and watch, because sometimes no trade is the best trade. You're not losing any money. That's just as good as making money if you were going to go in and lose the money. So those are the two of the criteria: maintain discipline, follow your strategy, and remain patient. Okay, now we do need as an edge as a retail trader, because we're going to be trading against other retail traders. Don't be led to believe that you're going to beat the institutions. You're not. You're not going to beat the institutions. You're not going to beat these people who have billions of dollars, and they can trade in microseconds in and out. You're not going to beat them. Our job is to beat other retail traders like ourselves. We want to have better tools than they do, and we're going to take the money from them. So our edges are the SPY Super System software that I'm going to show you. This is what identifies when institutions are in trades and when they're not. And then we trade relative strength and relative weakness. This is something that a lot of retail traders don't understand or don't do. This is not RSI. This is how is the stock trading on a 5-minute chart versus the S&P, the SPY, or the Qs. If the SPY is moving sideways and up, and you've got a stock that's stacking red candles, it's got relative weakness, and vice versa. Trading a stock with relative strength or relative weakness increases your probability of being successful and of that trade being profitable. We also want to trade with the market trend if there is one. There was a trend today. Market was trending up today. Yesterday it was chopping all over the place. So today we had a trending market. So if there is a market trend, we want to trade with that. If we don't, then we have to just trade with the best stocks. And then we want to buy near support and sell near resistance. That would be on the 5-minute chart, something like the VWAP, volume weighted average price, which I'll show you, or the 15 EMA, some definite support or resistance level that you want to enter at. You want to get into a trade as close to that support or resistance level as you can. So if it goes against you, your downside risk is minimized. Okay, so those are the main things we follow. And if you're able to do this, you're able to trade relative strength and trade with the institutions, you have a leg up on about 97% of the retail traders out there. Most of them don't know this, and they don't know how to do it. So the Compass system, which now is called the SPY Super System software, this used to be called the Compass system, same thing, but we did add some additional scanners and things. This identifies the highest probability trade setups while sidestepping setups that look good but will feel more often than they succeed. Okay, this is really important to make sure that you're only taking trades that are set up with institutions. We do this by identifying when the institutions are driving the move and when they're not, and I'll show you how we do that. It does analyze very complex trading data, but it displays the results in an easily identifiable visual format, which I'll show you on some charts. It makes it real easy for even novice traders to identify when institutions are in a trade and when they're not. Okay, all right. So this is how do we get an edge over retail traders. We're only taking trades that are being driven by the institutions. We're trading stocks that have relative strength or relative weakness versus the SPY or the Qs, and we're trading in the direction of the overall market. You do those three things right there, you're likely to be profitable. And it gives us an edge because our trades will be supported by institutional buying and selling. Stocks will be outperforming the index, and they'll be moving in the direction of the overall market. This is a big, huge deal for retail traders. I mean, there's millions of different strategies out there, millions of different indicators, but this is what really makes it a difference. Trade with the institutions, trade relative strength and relative weakness, and trade in the direction of the market. All right, this is just what I call a trade setup funnel. This is actually just this is a kind of virtual funnel. I go through this. This is the setup I go through in my mind when I look at when I'm looking at charts. This is what I look for. The first thing I look at, and this is really important. I have so much trouble getting retail traders to understand this. If you're going to be trading for a stock that's going to be like an all-day trade, 4 or 5 hour trade, or an overnight trade, or a 3-week trade, look at your daily chart first. Make sure the daily chart is bullish if you're going to go long. The daily chart has got to be bullish if you're going to go long. And then look at the 5-minute chart and find an entry that would be a bullish entry for you, like breaking above the VWAP or something like that. But make sure you look at the daily chart first. Everything's got to start with the daily chart. If you're trading a stock long and you've got a bearish daily chart, you have no flexibility in that trade at all. If it starts to go against you, you got to get out. You have to take your loss. You don't have any choice because you don't have you can't lean on it overnight because you don't have a daily chart that is bearish for you. Okay. And again, we trade with the trend with the stop in the market. This is sometimes there's trend, sometimes they're not. If there is a trend, we're going to trade with it. That's important. Third thing is the compass indicators, or the SPY super system indicators, as they're now called. These need to align. We need to know that if we're going long, the institutions are trading that stock up to the upside. The institutions are buying that stock if we're going long, and they're selling that stock if we're going short. And the indicators on the SPY super system tell us that. So that is critical. I mean, if I don't have this, I'm not in the trade. There's just no way I'm getting in the trade if the institutions are neutral or not or against me. I'm not going to touch it. Now, once these criteria are met, then I look for relative strength and relative weakness, because I may have 4, 5, 6, 7 stocks that meet this criteria. So then I'm going to take the one or the ones that have the best relative strength or the best relative weakness to the market. And if the market's trending up that day, I'm going to be looking for the relative strength. If it's trending down, I'm going to be looking for relative weakness. And then I'm going to enter as near support or as near resistance as I can. Going long, I want to be entering near support. Going short, I want to be entering when the stock comes up near resistance and heads back down. All right, so those are the criteria. I'm going to get a bunch of stocks that drop out of here, maybe, if there is any, and then I'm going to analyze them with a technical analysis to see which would be the best. And those are where we take these trades from. All right, and again, this is just a written out of that funnel method. Stocks to be traded should have a daily and 5-minute chart aligned. Keep focusing on that. And the indicators, the compass indicators, the SPY super system indicators, telling us that the institutions are in the trade, they've got to be aligned in the direction of the trade. These are critical things that you've got to be trading. You've got to be looking at the daily chart, and you've got to be trading those indicators if they're in the direction of the stock. If the indicators are bearish and you're trying to go long, forget it. Don't do it. Right? And then we have relative strength and relative weakness. One thing, kind of an aside, on the 5-minute chart, this is only on the 5-minute chart. You want to make sure the stock price is above the VWAP if you're going long, and make sure it's below the VWAP if you're going short. VWAP is called the volume weighted average price. I'll show you that on the charts. It's something that all the institutions use. It's very critical, and it's a big level that we use for support and resistance. Right, and I have patience, I say this all the time. All right, now the strategies in the room that we use, and on the alert service, I do straight calls and puts. This is obviously the most common thing for options. I also use debit spreads using weekly options expiration. If I'm doing a debit spread, like this past Monday, if I'm going to do a debit spread, the expiration date is going to be this Friday. I take them only for a week at a time. My results have shown me over the years that debit spreads that have current week expiration have a much better ROI than something that goes out 3 or 4 or 5 weeks. I do what's called time spreads. Over earnings, time spreads are a calendar spread. This is a non-directional trade that's designed to capture the volatility crush once the earnings come out. When the earnings come out, the premiums on the options get flushed lower because market makers have jacked up the price on the premiums to compensate for earnings, because they don't know whether the stock's going to go up or going to go down, and they don't know how much it's going to go. They estimate, but they don't know. So what they do to protect themselves is they increase the premiums on those options to protect themselves. And what a time spread does is it actually captures the volatility crush, or it captures the premium that's pulled out of those options when the earnings come out. And they're called time spreads. They're a type of calendar spread. What we do is we sell this week's calls and buy next week's calls, because this week's calls, the volatility is going to come out of them a lot faster than next week's calls, and we can harvest that. And then I have another strategy called weekly ATM that we just finished one up on Bank of America. This is a strategy where we take a stock that's neutral to bullish, and we sell puts on it on a weekly basis. We sell puts every week around at the money, and then we also have a much longer dated put that's long that we keep to protect ourselves. So if we sell we're selling the 55 puts for this week, and next week we sell them week after week, and the stock's trading in around 55, 50, then what I do is I buy the 54 or the 53 put out 4 to 6 weeks or 8 weeks, so that I have protection in case the stock goes down against me, and it also cuts down my margin requirement on a trade. That's the weekly ATM. At the money, or sometimes known as this automatic teller machine. It doesn't take a lot of management on these, and they work really well. And then I do some credit spreads, but basic credit spreads to capture premium over a few weeks when the market is correct. The strategy you use has dependent on the market itself. What's the market doing? What are our best strategies to take right now? And then I have a strategy. Now this one I've got in yellow. This is called the SPY Super System methodology. This is what we use for trading high probability trades on the SPY, the Qs, or the IWM. You can also do it on the futures, on ES and NQ. You can do it on SPX. You can do it on oil and gas, but typically I do it on SPYs, Qs, and IWM. And these are very quick trades. They're very quick trades. We use 5-minute candlesticks. Most of the time we're only in them for 2 candles to 5 or 6 candles. So I can't alert on these. I can't even post them in the room. I call them out in the room and let you know when the setup has occurred. But I'll show you the results on this, because this is really a good strategy for people who are looking to trade and can't be in the room all day, but they want to be able to make some trades, and they can't be around waiting for 4 hours for us to find a swing trade. This is the kind of strategy you can use for that. And this has had some outstanding results. I mean, really outstanding results, and I'll go over those. All right, now the alert service, it's designed for day trades, obviously, and short-term swing trades. I consider a day trade, obviously, a day that's a trade that you enter current day and get out current day. Short-term swings are overnight out to about 3 weeks, sometimes about 3 weeks, 4 weeks maybe, but mostly shorter than that. Most of these trades are going to close out in a few days, and that's what the day trades. Now, one of the things I'll mention here for anybody who's under PDT or pattern day trader rules, if you don't have a cash account, or you don't have $25,000 in your account, then you can only do 3 day trades in a 5-day rolling period. All right. But notice that I mentioned that the first thing I look at is the daily chart. So anytime you take a trade, if you don't have the ability to close it out that day because you've exhausted the number of trades you could make in the last 5 days, you can hold it overnight, because these trades are all set up to be structured as a potential swing. I may close them out during the day, but most of the times I'll hold them. But you can hold them and still probably do very, very well on the overnight if you don't have to close out a day trade. So I did that on purpose which is why I use the daily chart. Again, it's designed for traders who can't watch the market all day. Again, we put out these real-time alerts on the highest probability trade setups that I can find. And we do highest probability trade setups in identifying institutional involvement. This is the critical thing. We look for institutions in the trade. I also look at market internals, which is cumulative volume indexes for stocks moving up minus stocks moving down to tell us if I have a bearish or bullish trend in the market. And then I do some technical analysis. Right, so that's how I find these stocks. This is I got to update this. This is a cumulative equity curve for the alert service. This is from March of 23 to June of 24. I got to do another one. I haven't had time to pull one off. But this is if you put $2,000 into each trade that was alerted on, this is what your profits would have been starting at $2,000 a trade, with $2,000 a trade. I have to use an arbitrary number because you know, I've got to make comparisons. So this is at 2,000 a trade, up pretty nicely for that period of time. All right, now I'm going to cover Heiken-Ashi candles right here. You had a computer issue, so I get in late. Can you please yeah, Dave, you'll get a recording of this. This will be recorded. It'll be sent out to everybody who registered. Do I have a scanner that lines up price with indicators? I do. I mean, I have scanners in I'll show you the scanner I've got in TOS. I also use TC2000 and do a lot of scans in there for what things that I'm looking for. But you'll be able to see some of these as we move ahead. All right, Barry. All right, so we're going to talk about Heiken-Ashi candles here. This is going to take a little bit of time. How many people here are not familiar with Heiken-Ashi candles? Let me know if you're not, if you've not traded with them before, because they're very, very effective. These candles are really, really effective. You are, Perry. Okay, good. You're effective. A lot of people know about them. A lot of people don't trade them, and a lot of people may be trading them incorrectly. So that's what I'm going to try to show you here. All right. So again, trading using Heiken-Ashi candles with the SPY super system, the compass system. All right. This is what Heiken-Ashi candles look like. This is just a graphic of what they look like. Heiken-Ashi candles are not regular candles. Heiken-Ashi candles, bearish Heiken-Ashi candles have flat tops on them like this. See, no wick, flat top, flat top, flat top, flat top. These are Heiken-Ashi bearish candles. Heiken-Ashi candles are made up of two candles. This is what they look like when they're bearish. This is what bullish Heiken-Ashi candles look like. Flat bottom, flat bottom, flat bottom, flat bottom. All right, so these are bullish. So what you're doing with the Heiken-Ashi candle, one of the key things we're doing is we're trying to find a reversal in trend. If we like the stock long and it's coming down, we see it comes down and it comes down to a support level, when do we want to get in? Well, we want to get in when we get a Heiken-Ashi reversal candle to the bullish side. So here you see you got a lot of flat tops, and then you're starting to get these tails on it, the big tails. That doesn't matter, but this does matter. You start to get wicks on the candles. They may go green, they may not go green, they may be red, but you're getting wicks here. And you got wicks, you got wicks, you got wicks. Now see right here on this, you go from wicks and tails to a flat bottom green candle. That's a Heiken-Ashi reversal. This is a downtrend. This is the Heiken-Ashi reversal to an uptrend right there. That's where the reversal took place. And you notice you get flat bottom, and then you start getting wicks and tails again. So it's kind of a short-lived Heiken-Ashi reversal. Now it's important to understand, one of the big differences on Heiken-Ashi candles versus regular candles is if you get a regular candle that's bullish and you get a big wick on it like this, typically that tells you that there's a bunch of selling coming, and that typically means the move is running out of steam. That isn't what the case is on Heiken-Ashi candles. Wicks on the top of Heiken-Ashi candles are actually even more bullish than no wick on the top of it. So again, here's your Heiken-Ashi reversal. Now you would get in here, watch it, and then you start to get wicks and tails. Then you get out right here. This will be a short trade. Now you notice we're getting wicks and tails, wicks and tails. Here we go to a Heiken-Ashi bearish reversal right here. One candle, all right? Candle comes down. Continuation coming down. Now we get another green candle here with wicks and tails. Here is a big Heiken-Ashi reversal right here, because this candle is huge. It's a huge Heiken-Ashi reversal candle with a flat bottom. That is a major Heiken-Ashi reversal that you're looking for to get back into the bullish trend, and you get flat bottom after flat bottom after flat bottom after flat bottom, another wick and a tail, another flat bottom. This is a beautiful trend, and they identify them easily. So that's what the candlesticks look like. All right, that's what they look like. So I just want to kind of cover, I did a Reddit post on this a few years ago on using Heiken-Ashi candles, the most effective way to do it. And I just took some of the excerpts out of there. But Heiken-Ashi candles, it means average bar in Japanese. It's using 2 candlesticks to create a candle. It smooths out the price action, so identifying trends and reversals is clearer, since it eliminates a lot of the noise and makes it easier to see trends and stay in a trade throughout the trend, allowing for improved profits. It just stripping out the noise helps an awful lot when you're trying to stay in a trade. Now, bullish Heiken-Ashi candles, as we've just talked about, have flat bottoms, and bearish Heiken-Ashi candles have flat tops. That's important to remember. All right, it's very important. Bullish trends will have flat bottomed Heiken-Ashi candles one after another, and bearish trends will have flat topped Heiken-Ashi candles one after another. Okay, the flat bottoms with bullish, flat top the bearish. All right, and again, a reversal in a bullish trend will have a flat bottomed Heiken-Ashi candles followed by smaller doji candles, as we saw in that other example, and they're both with both wicks and tails, followed by a flat topped bearish Heiken-Ashi candle. That would be the reversal that you're looking for, from a bullish trend to a bearish trend. All right, and you can read this a little bit later. I'm not going to go over all of this, but it was a fairly long column I did. But these are the major points on it. Again, once you have a valid Heiken-Ashi reversal, the first thing it needs to be true is that the Heiken-Ashi candle height has to be at least as large, preferably larger, than the prior candles that occurred prior to the reversal. When you had a really big flush down in the market with big Heiken-Ashi bearish candles, you don't want to take the reversal on a tiny little bullish Heiken-Ashi reversal candle. You want a big candle, or a couple of medium-sized candles to confirm that the conversion has occurred, capitulation, and the move back up again. And the reason that Heiken-Ashi candles are so critical for this reversal is, if you're looking for a breakout, for example, and you're looking at regular candles, and you get a break through a resistance level, and it looks like a breakout, the Heiken-Ashi candles is not going to let you in until the Heiken-Ashi candle closes. So you're going to have 2 candles built into that candle, which means the confirmation of the reversal is built into the Heiken-Ashi candle. When you're trying to find confirmation of a breakout with regular candles, they can easily fail. So taking Heiken-Ashi candles as your key for entering a breakout or a breakdown is going to cut way down on the number of failed breakouts that you get. All right, so that's important. Again, there's more things in here we talk about, but this is, again, you can read this when you get it if you want to, but that's the key points on Heiken-Ashi candles. Let me just get a sip of water here for a minute. All right. So again, this is kind of just a little cheat sheet that we go through here. We talked about this. Heiken-Ashi candles evolved from Japanese candlesticks. They combine open close data from a previous period with open high low close data from a current period. And they can be used on 5-minute charts. They can be used on daily charts. They can be used on weekly charts. They can be used on anything that you want. Again, Heiken translates to average, and Ashi to pace, average pace. That's what it recommends. And again, unlike traditional candlesticks, Heiken-Ashi candles don't follow the 1, 2, 3 candlestick reversal pattern, because remember, these are not standard candles. You don't have like wicks on the top of your bullish candles are not, they don't indicate weakness. They indicate more strength. But again, the whole point of it excels in identifying trends, potential reversals, and classical technical analysis patterns. Now, one of the things that's important to understand is that when you get into a trade based on the Heiken-Ashi candles, when you're thinking about getting out of the trade, you need to switch to regular candles so that you can identify momentum waning and get out of the trade more quickly than for waiting for the reversal on the Heiken-Ashi candle to occur again. So I use the Heiken-Ashi candles to get in, but I use regular candles for my exits. All All right. Again, this is talking about Heiken-Ashi candles and selling pressure, buying pressure. Again, the absence of lower shadow indicates the strength of the buying pressure, and that's why flat bottom candles are so bullish, and flat top candles are so bearish. And again, if you get small Heiken-Ashi candlesticks of those with long and upper shadows and lower shadows, that's the indecision. It's basically a doji when you've got a wick and a tail on it. Okay, so understanding trends with Heiken-Ashi. Now here we have a graphic of Heiken-Ashi candles here. A flat bottom candle in an uptrend signals a strong visual of current trend right here. So anyway, you've got flat bottom candles, you've got a bullish trend, right? Now here you have a reversal with a color change, but notice how small the candles are. This is not, even though you've got a Heiken-Ashi bearish here, these are too small. These are not reversing a trend. You see, they just come down and then it continues on up again. So you would stay in the trade unless you had a big enough profit, you could exit it here. But if you're in this trade off of here and you get these little candles, that's not telling you you've got a Heiken-Ashi reversal. This is telling you you've got another Heiken-Ashi continuation here. All right, it got choppy, and now you've got flat bottoms. This is a Heiken-Ashi continuation of the bullish trend. See, little red candle, that's not enough to get out. You keep getting flat bottom, flat bottom, flat bottoms. Now we're getting some action here. That's a flat top candle that's pretty good size after this trend. So if we start getting a couple of those, we would be out of the trade right here. And most likely you would have been switched to regular candles and been out even before that. But that's what Heiken-Ashi trends look like. Okay. Again, this is tips for using. Examine nearby support or resistance levels that impact potential gains. This you should always do. If you're in a trade long, you want to look at your daily chart and see where's my resistance level, where's my support level on a short, how close am I to it, how much potential profitability can I make on this trade if I take it here. You know, if you get into a long stock and you're buying some calls and the 200-day moving average in the daily chart is 10 cents away, you don't want to be doing that if it's above it, because you don't have enough potential of a gain on that. And that's part of technical analysis. And again, align your trade with the current market trend. So if your market's trending up, you want to go for the long ones. Again, choose a stock with relative strength or weakness. This is all based on our criteria. And again, after entering the trade, switch to standard candles. That's where your X is going to be taken, so you can identify the momentum when it's waning more quickly using regular candles. All right, so this is a recap of the advantages we just talked about. It smooths out price action, reducing noise. Very important. Makes identifying trends much easier. And again, it improves identifying confirmation of trends or trend reversals. This is really important because so much of our trading is dependent on catching breakouts and catching breakdowns and coming out of compressions. And if you're using Heiken-Ashi candles, it's going to confirm within that one candle instead of looking at multiple candles. And again, it helps identify potential actions when the candle bodies shrink or reversal occurs. All right, this is a chart of Uber. These are regular candles in Uber. I just kind of want to show you these on a regular chart. Then we're going to look at some real charts from today. Here's Uber right here. These are regular candlesticks. All right, they're pretty easy to see. Nice little uptrend. Here's Uber in the Heiken-Ashi. Right, so here's a Heiken-Ashi reversal right here in Uber, and you see how strong these are. Now these candles are blue on my chart because I use TC2000 and I color my candles blue if the Bollinger Bands are expanding. Or if, let's say if it's coming out of compression, I'm going to have blue candles. If it's kind of out of compression to the short side, I'm going to have pink candles. If not, green is just going to be regular bullish candles, but not breaking out of compression. So here's Uber. Now notice one thing here. You see this gap in Uber, right? Notice there's no gap. Heiken-Ashi candles, there's no gap. The next one candle always starts in the middle of the previous candle. Always starts in the middle of the previous candle. That's how Heiken-Ashi candles will look. All right, so I'm going to look at some live ones today that we have. First thing I'm going to do is I'm going to bring out TC2000 so we can see that. Then I'll show you some on TOS, on Thinkorswim. But these I look for. This is a daily chart on ConocoPhillips from today. This is today's ConocoPhillips chart, right? And these are Heiken-Ashi candles right here, right? And you can see here that It had a little bit of a run up. It had a nice run down. But here's what we noticed today. We went from a bullish candle, just one, to a doji, to a flat top candle that's pretty big. This is a Heiken-Ashi reversal. So you'd be looking to short ConocoPhillips tomorrow if this continues. In other words, this thing opens red tomorrow, it would be a good short. Is this going to be recorded? You get a replay. AE, you will. You'll get a replay. Anybody who signed up for this will get a replay of this webinar today. All right, so there's ConocoPhillips. Nice short. Let's see. This is another one here. CNC. All right, so CNC. Now, this is an interesting one. We took this trade a couple days ago. We took this trade as a short. You see how it runs up here, but see, this is a big, huge Heiken-Ashi reversal candle right here. Now, let me show you the regular chart on that. Here's the regular chart on CNC. All right, kind of choppy. But if I look at the Heiken-Ashi candle, you can see the beautiful downtrend in this. Bearish candle, bearish candle, bearish candle, bearish candle, bearish candle, one right after the other. A little bit of a wick on this, and then another bearish candle. This was a beautiful short. This is what we did, and we took this short. So we took it here, and we took it overnight, and we closed it out today for a nice profit. All right. One other short one I want to show you from today. Airlines were pretty weak today. Here's UAL. Choppy stock, but Heiken-Ashi reversal right here, followed by a kind of a doji yesterday, another Heiken-Ashi reversal, pretty good sized candle today to the downside. This is a bearish setup on UAL. And here it is right here. And these are the regular candles. It looks pretty bearish, but the Heiken-Ashi confirms that it's very, very bearish. On the upside, let's take a look at root. Here's root today. Now, notice we had a Heiken-Ashi reversal right here. All right, this was a pretty nice entry. We actually traded this a couple times in the room on this route. But here's a Heiken-Ashi reversal, and you get flat bottoms one after another, after another, after another. Now we're getting a couple wicks and tails. Another big flat bottom candle today. This is a continuation, a Heiken-Ashi continuation to the upside. Okay, that's root. Stitch Fix, another one I identified today. All right, big flush down in Stitch Fix. These are Heiken-Ashi candles. All right, so here is a reversal in Heiken-Ashi right here. But this was not a reversal. There's no flat bottom. Here's your reversal candle here. This you could take it long if you dared. I mean, it was pretty weak, but that's a Heiken-Ashi reversal, and you had 3 or 4 candles in a row. But this is what interests me. This is called an algo resistance line that I draw. This shows you a breakout here on Stitch Fix. All right, you go from flat bottom, flat top to flat top, to flat bottom to flat bottom, small candles, another flat top. But here we get a Heiken-Ashi reversal. Here is another one, and then we get this doji. Now we just got a continuation of Heiken-Ashi today on Stitch Fix to the upside. So this looks like a decent long, and here it is right here. You can see where it is. Technically, it's halfway up this red candle. So technically, it's got some room to at least get to the top of that candle, about 646, about $1 to the upside. All right, so that's Heiken-Ashi on Stitch Fix. Now, O'Reilly also pretty expensive stock, but again, another nice Heiken-Ashi reversal trend here. This white line, by the way, is the 8 exponential moving average. This orange line is the 15. I use them together in tandem. As it moves up, it starts to weaken a little bit, comes down to the 8, and now we get a Heiken-Ashi reversal to the upside right here, flat bottom. So I'll be watching this tomorrow for O'Reilly for another long. And QFIN was one I've been watching for a while. This QFIN has been choppy. Here was QFIN Heiken-Ashi reversal right here. All right, and you got 1, 2, 3 candles up, and then a doji, and then another wick and tail, and then another flat bottom, flat bottom, flat bottom, flat bottom. And then it's just chopping around. And then we had a Heiken-Ashi reversal to the upside, move down and chop around, and now we get another Heiken-Ashi reversal to the upside, telling us that it's likely to go higher at this point. And if I look at QFIN, there it is right there, and you can see what a beautiful breakout we're getting on QFIN. All right, no earnings till 3/11. That's a nice setup on QFIN. Okay, so that's and there's other ones, but I just kind of wanted to show you what it looks like. I scanned for those. Now I'm going to show you also the compass system, the SPY super system. This is what the chart looks like. You're going to see plenty of these here in just a minute, but I do want to show you something. This is a trade that we took today long. All All right, this is Shopify. Now I'm going to switch over to the daily chart. All right, so this is the daily chart on Shopify. And then I'm going to switch over to Heiken-Ashi candles. All right, so I just go to Heiken-Ashi candles. This is Heiken-Ashi candle right here. Let me expand this out. All right, see these tails on here? This is earnings, tail with a wick. See what we got today? See that flat bottom candle on Shopify? We took this long overnight. Took this out to, I think, March 7th as a long setup on Shopify. And if I look at the 5-minute chart, this is where I got this from today. But if we look at the 5-minute chart, these are Heiken-Ashi candles on the 5-minute chart. Let me shrink this down a little bit. Where do we get in? We actually get in back here this morning when we hit some Heiken-Ashi reversal candles, and then we just rode it. And again, when you're in the trade long, you don't worry about these pullbacks because you're going long. What matters is what's the daily chart look like? And the daily chart looks great. And I'll show you one other thing we did today on basically a quick trade. This is ABBV. And let's find the Heiken-Ashi reversal on ABBV. All right. So we're coming down along here. This is the VWAP right here, the volume weighted average price. This is where I'm looking for a break. See the wicket, the tail here? Then I get a break here. This is where we go long right here on ABBV, on this Heiken-Ashi reversal. And we just take this up, take this up, take this up, and we get out. That was a pretty quick trade, but we made decent money on that. And I'll show you why it was okay to take that. Because here is the Heiken-Ashi candles on ABV on the daily chart. Okay. Yesterday we got a Heiken-Ashi reversal continuation today that tells me it's okay to stay in this trade long if I wanted to. I didn't, but I could have, because I had a Heiken-Ashi on the daily and a Heiken-Ashi on the 5-minute. So that's what we take today, right? So you're going to see plenty of these charts here in just a little bit. All right. So those are some of the Heiken-Ashi reversals. All right. So that's how you trade Heiken-Ashi candles. All right. It's really, really helpful to keep you from getting into trades too quickly. I think one of the biggest problems that a lot of traders have is like overtrade. I mean, I think that's one of the biggest drawbacks for retail traders. They overtrade. You don't want to be overtrading. So how do we do that? Well, you use Heiken-Ashi candles to confirm that the breaks up or down have been confirmed. That's going to keep you out of a lot of trades right there. All right, so the SPY Super System, these are going to be I'm just going to kind of recap the results that we have in the room. I'm going to go over some of the details as well. But 2023, using $2,000 for trade, we made $60,200. $60,200. If you put $2,000 into each trade, obviously nobody's going to necessarily do the exact same amount on each trade, but I have to have some sort of a baseline. So made about $60,000 off of $2,000 per trade in 2023. 2024, we didn't do as well, but we still made $55,000, $54,900. And that's easily within reason. Depends on what the market's doing for that period of time. Right, so those are our 2023, 2024 results. These are trades. Now I've got them listed here by month, but the reason I'm showing you these is I want to show you what to expect for your return on trades that you're going to get either in the room or on the alerts. These are typically the ones that I post in the room or send alerts out on. This is the kind of returns we get. Don't be thinking that you're going to get 300 or 400 or 500% on trades. I'm sure you've seen webinars where people tell you that you can make 200, 300, 400, 600% on a trade. All right, consistently. You can't do that. You've got to be taking crazy type trades to do that. Taking way out of the money calls, hoping for a tremendous pop. It just is not practical for consistency if you're going to be consistent. And what our goal here is to be consistently profitable traders. So these are the trades we took in January. Again, you can see 10%, 43%, 37%. This is the range your trades are going to stay in. We're going to have some losses, but you can see we did have a good one in Boeing here at 96%, and a nice one in Mara 65%. But in January, 20 wins and 2 losses for a 90% win rate. It produced $7,505 in the room. This is February. Again, you can see the percentages. We had some losses, as we always do. I think I've only had 1 month with no losses. But again, you can see the percentages. Very consistent. 56 here on PayPal, 11% on UPST, 28% here, 50% on FTNT. February trades 24 and 2, 92% win rate, and 11.745. We had some big trades in February. The market was kind of helpful. It was moving up. We were able to ride some of those trades. The alerted trades, we don't have as many alerts as we do in the room because I can't alert on every trade, because if we're taking a trade and I expect to be out of it in a half an hour, I'm not going to alert on it. And if I take the trade at 10 minutes to 4 in the afternoon, I can't alert on it because it doesn't give the alert members time enough to get into the trade. So it's going to have fewer, but it had 20 wins and 2 losses, and it produced 69.30 in February. Right, so I'll just kind of run through these. You can see the trades here in May. 15 and 2, 88% win, 49.79. These the numbers are typically what you're going to see. The option room was 57.36. The alerted trades was 49.79. The win rates typically range between about 85 and 90. This was low on here, and we do go below that sometimes. All right, that was May. This is June. I'll just kind of run these so you can see the Trump 75.90 in the room, 83.16 on the alerts. This was really a good month in June. For the alerts, we only had 1 loss and we had 14 wins, $8,300, $200 put, 2,000 put into each trade. And you can see the percentages; they don't change a lot. You know, they hang in that 15 to 40 to 50% range. July trades, same thing, 22 and 4, and alert trades 12 and 4. We only had a 75% win rate here, so but still netted $3,300. All right, August, again, good month. September, 1 losing month. This is the losing month that I had this year. This was in September. We had 8 wins and 5 losses in the room. Didn't have a lot of trades to take, and we ended up losing 17.86. I thought it was more than that, but 17.86, and you can see most of the losses here. Alerts, 8 wins, 4 losses, a 66% win rate. This is the lowest probably that I've had in 3 years in this one particular month, but I wanted to show you, you know, to be transparent on some of these things. We did have a losing month. I think this is the only losing month of the year this year. And the alerted trades, yeah, we lost $295. But if you look at what we made back here, it kind of dwarfs these kind of losses. But you're going to have them occasionally. You're going to have them. October trades, very nice, 17 and 3, 85%, 82 back to normal here, 74.48 in the room, 6,063. And November trades here, 14 and 2, 88% win rate. Didn't have an awful lot of trades, 59.58 in the room. Alerts, 7,800. We did more in alerts than we did in the room. But again, percentages stay the same. Now, those are the monthly results. I haven't categorized all the rest. I do have November and December coming up, I think. But to kind of go over the alerts first. As far as the alerts are concerned, what you're going to get if you're on the alert service is you're going to get an alert when I take the trade. You're going to have the stock symbol in there. You're going to have the option strike price. You're going to have the expiration date and the price to pay for the option. It's going to tell you how much. Now you're going to get one alert when we get in and then another alert to exit. And that may come the same day, or it may come 2 days later or 3 days later. And there may be an adjustment to it before we get it off. If I wake up in the morning and I look and I have a big gap up in the market, as we did yesterday with Target, we had a big gap down and we were shorted. I moved the price target to a higher level before the market opens so that you can change it. So there could be some changes, but you'll at least get one exiting alert to tell you to get out of the trade. And if you do, when you do get the trade to tell you to exit, you want to set it as good to cancel. So if you're not at your computer when the market opens in the morning and we get a gap in our favor, you want to be able to take advantage of that gap. So that's important. All right, so I'm going to just quickly cover how do we achieve these stunning results. Again, we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. So we only take trades when both of these are in our favor. Not 100% true. I'll take them if the institutions are in a trade bullishly and the market internals are neutral or bullish. But if they're neutral, I'll take the trade. I won't take it if the market internals are bearish and the institutions are in the trade. I've got to wait for at least to get a neutral market internals before I get in. Okay. All right. So the way we do this is the SPY super system, I should say SPY super system, identifies when institutions are creating a trend. We look at it across multiple time frames, but this is the most important one to me, the momentum. We take a look at momentum across multiple time frames. We also look at trend and we do look at some money flow. But this is the one that's most critical. I'm going to show you this. We look at it across, if we're looking at a 5-minute chart, the SPY Super System is looking at the 5-minute, the 15-minute, and the 45-minute. It's looking to make sure that all three of those time frames have momentum to the upside or to the downside. So this is kind of what it looks like. This is Tesla on the SPY Super System. This is an old one, but I just kind of want to show you what the compass system of the SPY Super System looks like. Right? These are your indicators. This is the long-term trend right here. All right? This is the multi-time frame momentum. This is what we use for swing trades. This is the current time frame momentum. This is for the 5-minute on a 5-minute chart or the daily on a daily chart. This is a key level for us. And this was a derivation of money flow. I don't use this anymore. I'll show you the different chart I've got set up with that off of it. That doesn't show up anymore because I didn't feel like it was helping me at all. But this is the critical one, this one and this one. And again, green is bullish and blue is bullish, red is bearish and yellow is bearish. And you'll see those as we go through here. This happened to be a setup on Tesla we took quite a while ago, and you can see the breakout off the 15 EMA. See the little 15 EMA? That's the support level. When you get a bounce off support, that's where we take the trade. And we get, obviously, the institutions are buying this. Okay, so I'm going to cover the SPY Super System. Now, this is the SPY Super System that we trade intraday on the indexes. I want to cover this before I cover the regular trades we've taken. The regular trades, we take this intraday and swing type trades. This is only on the SPYs, the Qs, and the IWM. These are all very short duration trades. 1, 2, 3, 4, maybe 5 or 6 candles. And you only have one on at a time. You're only trading one. Now, this needs to be managed by the traders in the room. I mean, I point them out. I tell you, I give you the criteria to look for. I point them out when I see them. I tell you when I'm getting in. But a lot of our traders in the room trade this themselves. That's all they do. They just trade the SPY Super System off of the methodology, off of the SPYs, the Qs, and the IWM, or even the futures, even the ES and the NQ. All right, so this is the results we've had with this since I started it, which is July. And this is 2,000 invested in each trade, 25.96 profit in July. August, it was 16-0. August, 56 wins, 6 losses, 2 scratches. A lot of trades, because all of these trades only last 10 minutes. So you can have a lot of trades if the market sets up for you. 2000 produced 82.01. September, 40 wins, 3 losses, 2 scratches. 2000 invested in each trade produced 71.32. So again, this is important to understand. These are quick intraday trades that you have to manage yourself. I can tell you that's set up, but you've got to manage getting in and getting out because they can move pretty quickly. October, we had 33 and 4, 4,800 in profits. And again, I emphasize these are one trade at a time. You only have one trade on of these at a time. You're not trading multiples, and they're going to last a short period of time. You'll be in and out. Most of the time, you're going to be in and out in 10 or 15 minutes. And this is the November SPY Qs and IWM. 2000 invested and produced 93.70 in November, 54 and 5. December 69 and 15 produced 10,000. This was my best month so far in the SPY. I almost that much in January, but 65 and 19. Now remember, these are trades. This number of trades. These are my trades. These are trades that I took based on ones that I mentioned in the room and identified that I was getting into. Other people will make more or make less, and they may be taking other trades because there's plenty of other setups that I don't see that occur. But this just shows you what our results have been with that. Now, I want to emphasize the SPY Super System trades that we take in the room off of the indexes. That total profits is not part of the room total. They're completely separate. So when you see this 93.70, that was not included in the November room total, right? So here in October we had SPY Super System trades, which was the index trades right here. 33 and 4, 89% win rate. 2000 created 48.31. In the room itself, we had 17 wins and 3 losses over the whole month. 85% win rate. 2000 invested in each trade, produced 74.48. So these are 2 separate trades. A lot of people don't trade these, but we have other people, that's all they trade. They just trade this. They don't even take the other trades. It all depends on what you want. But it's important to understand that this is not part of this. These are separate. Here's November, 54 and 5, 91% win rate. 2,000 invested, produced 93.70. That's a lot of trades, but they're very quick. You know, that's over a whole month. So, you know, you might be taking, you know, maybe 3 trades a day. And that produced 93.70. And the options room, we had 73.93. So again, completely separate. These are not, this total doesn't include this doesn't, and that includes that. And here's the December, 69 and 15, 82% win rate, produced 10,450. And the options room, 14 and 3, 45.97. So that again, you can see that the SPY super system was doing much better, but there's a lot of trades. There's a lot of trades in this, so you're putting a lot in, but you're in and out pretty quickly. So you're not tying up a lot of money, but you do have to be able to day trade, which means you either need a cash account or 25,000 in your account to trade with. Miguel, you can only trade the gold and micro NASDAQ. Can I trade with the system? Yeah, you can trade futures, sure. As long as you got, see, you don't have to trade and Thinkorswim. That when you see the platform I'm going to show you, it's going to show you the indicators. But you can just load up whatever indicators that you want. When I was showing you Thinkorswim over there, when I was showing the Heiken-Ashi candles, you can put in your indicator for the Qs, the ES, gold, whatever you're trading futures on, whatever platform. I don't know if you're trading futures on Thinkorswim, if you're trading on NinjaTrader, but whatever you're trading on, yes, they work fine. What is the minimum account to trade options? It depends. I mean, the minimum account is trading options doesn't matter. How many trades am I going to take is what matters. If you're going to be day trading a lot, then the SEC says you got to have $25,000 in your account balance, or you need to have a cash account. You can trade a non-margin account. A non-margin account means that if you take a trade today and then close it out today, you're not going to get the funds from the closed trade till the next day. It doesn't. That money doesn't go into your account until the next day. That's a cash account. But if you're going to trade, you know, if you're going to trade basically as a day trader, you need to have at least 30,000 in your account or so to do that. Right? But yeah, you can trade anything you want. If you can put the code in Thinkorswim, which you can put everything in there except for FX, then you can trade it. Right, so that was December, and this was, I just kind of wanted to cover, this was the fourth quarter with the SPY super system and the room. So October to December, the SPY super system resulted in 156 wins and 24 losses, 87% win rate. This is pretty normal for us. 2,000 invested in each trade produced 24,651. Now it's important to remember with these SPY super system trades, you're getting in right almost at support and right at resistance. If they go against us, you're out of the trade really, really quickly. The losses are small. So if you know what a profit factor is, these things produce profit factors in the neighborhood of about 7 to 8, which is really pretty high. Okay, and again, so here's the rooms for October through December, 17,774, and the option room and SPY combined was about 42.4 for everything. If you took them all, it's a lot of trades, but I just kind of wanted to show that to break them up. All right, so this is the SPY super system. This is what it looks like on the Thinkorswim platform. Again, I got the SPY up here, Miguel, but you could put gold up here, you can put oil up here, you can put NQ up there, whatever you want. It's going to show the same information. Now it looks really busy, but the only things you're really interested in for the SPY super system trades, like methodology, is this here. That's the current time frame momentum. This one needs to be blue or green for long, red or yellow for short. Right? You're also interested in the VWAP, the volume weighted average price. This is your support level, okay, or resistance level. And this is a 15 here, EMA. This is a support level and a resistance level. These are the only two levels I use to enter and exit trades, right here. And this is the compass system or the SPY super system showing us what the current time frame momentum is. This is critical right here. This is what I'm trading off of. Notice this particular trade. See, this is where my entry was. Notice that the VWAP's right here, the pink line. Notice the stock price went above the pink line, right there, and the 15. And this went from selling, which was red, to buying, which was blue. This told me that the institutions were buying right here. So I took this trade. It kind of moved flat for a while, but as long as it stayed above the 15, I'm in the trade. So I rode this up, it's getting kind of extended, and then I got out right here. And that was for a nice one. That was $220 per profit per contract. Now, most of your SPY super system trades, especially on choppy markets, are going to be more in the neighborhood of 50, 60, 80, $100 a contract profit because it's fairly quick. Other SPY super system trades options, they are for me, Ed. I take options on the SPY, the Qs, and the IWM. I mean, there's nothing that says you can't trade the stock, but I'm leveraging here. I'm trying to use leverage, so I'm using the options on these, and I'm not worried too much about time K because I'm usually going to be out of the trade fairly quickly, and you're gonna have a pretty nice return using options versus using stock. The SPY system trade options, yes, they are. Okay. All right. So this is the SPY super system. Here it is, the SPY super system methodology. This is what the chart looks like. Now, I have created a new template for anybody who just wants to trade the SPY super system. Intraday trades. You can interchange these on Thinkorswim. If you buy the software from us, you'll get this layout and you'll get this layout. It's going to show both of these things. But this is what people use for just SPY super system because the only thing you're interested in is the current time frame momentum. I've got the actual oscillator right here. Is your VWAP and your 15. And there you go. That's all you really need right there. All right. So this was a blue candle here, went to green, and we broke above the VWAP. You could buy it right here. You'd have to watch it because it went to yellow, and then you just ride it up to here, and then as soon as it starts turning red, you get out. Right. But this is what the new template looks like. I don't trade SPX. I do trade SPX sometimes. Ed, you can trade it doesn't. You can trade SPX. I have a bunch of people that trade SPX. I mean, if you put SPX on the chart and you follow that, anything, it'll work for any index that you want to use. You know, the SPX is going to follow the SPY pretty closely, but it's obviously quite a bit more costly. All right, so here's another trade on the SPY. I just want to show you these SPY super system trades, and I'm going to show some of the regular trades that we've taken in the room for swing type trades, and then we'll wrap it up. All right, so this was a SPY super system trade on the SPY here. Again, you see how it's all green? Currently, this is all we're interested in, right? The current time for momentum, but the institutions are buying the heck out of this thing. Everything's green. So this is where I take the entry right here. As it's compressing here, I wait for this thing to pop. And this was probably a Heiken-Ashi candle. I don't have it on here, but I take it right here as it breaks above the 15 EMA. The VWAP is pretty far away, so I use the 15 EMA here. And I take it here, and I ride this thing up, and I ride this thing up, and it doesn't cross below the 15, but I'm getting a little antsy. I mean, I'm up money because this 15 is moving, but this is where I get out when I started getting these dojis right here. $130 profit per contract on the SPY on that one. It works on the Ninja platform, Perry. It's a different piece of software on the Ninja platform. You can trade on the Ninja platform. Rightline has something called the money flow tracker, which goes on Ninja. It doesn't look the same as this. Ninja produces different looking charts, but I like Thinkorswim, and I like these charts. I think they're simple to see, but they also have a piece of software that runs on Ninja that basically produces the same kind of information. All right, so that was good for $130 profit there. Here's another one here. This was IWM. IWM, not a big mover, but again, see we were yellow, selling, blue, buy it right here. As it breaks above the 15, kind of just drifts, not really going far. This is quite a long time to be in a trade. I'm usually not in anywhere near this long, but I stayed in here for quite a few candles, probably close to an hour for $90 profit per contract, which isn't bad. I mean, it's not bad. That depends on how many contracts you take. If most of the time in these kind of situations, depending what I'm paying, I'm taking about 10 contracts or so. This was a SPY super system short. This was an IWM. See how it's compressing? Everything's red, so we know the institutions are selling this right now. So what I look for is a break below the VWAP. The pink line is the VWAP. Now this blue arrow you see is called a pop out of the box or pop signal. This is telling you that the stock is breaking compression to the downside. Right? So we take, this was a perfect place to take that trade. And again, I want to make sure it stays below the VWAP and then below the 15 as the 15 starts to pull away. So I stay in the trade as it moves down, and I get out right here. I'm starting to get dojis, the 15's flattening out, and I go to blue. I get out before it goes to blue. it's selling all the way along here, so I take it right here, $120 profit on the IWM on that trade, right there. And again, this was another one. This was a big one. This was a SPY super system trade on the SPY. Again, this is where I get into this. It was already selling. You can see it was selling here. It was yellow and red. I took it on this break below VWAP off of this pop signal, and I took this, and it didn't do anything for half an hour, but it was riding along 15. The 15 becomes my stop. It's got to close above the 15 for me to get out of this trade. Now it went up and went above it, but came back down, went above it, but came back down, stayed below it, and then it started to move pretty hard. This white line is called the pivot point that I have on my chart, and this pivot point will sometimes be support or resistance, so I had to be cautious when I got there, but it broke down and flushed down, and that's probably one of the biggest trades I've had in the SPY super system, $280 a contract, a really big trade. This was another one here for $150. Same thing, this is IWM. Again, I just want you to see, here's the blue, selling red, buying blue. There's the break above the VWAP and the 15 EMA right there, right? So it's riding the 15 up, we get in the trade, we ride it up, we ride it up, we ride it up. Never breaks below the 15. Once I get a flush like this, I'm out, right? As soon as and I'm looking at regular candles to see this flush coming down. So I exit the trade, $150 a profit, right? So here's a couple more I put on here. I didn't put entries and exits. I want you to see there's something you can do here. This particular one, if you're looking for it, for this one, this was a Heiken-Ashi reversal. This was a bearish break right here, but the SPY was positive that day, so I didn't take it. I'm looking for greens. What I'm looking for, I can't really go short here because it was bullish for the day. But when I move up, I go from red to blue, and I can buy it here, but I don't take it until I get a break above the VWAP. And you see how it hit the VWAP, here's my entry right there. As it breaks above the VWAP with blue on the current time frame momentum, that's where I take the trade, and that's where I get out of the trade right there. Okay, and this is another one here, IWM, same thing. Can you see it's compressing? This is where you would take it. See how it went green right there as it pops above the 15 EMA. You take it right here and you ride it right up as long as it stays. And you could get out here, you could get out here, anywhere along there. Another SPY trade here. I actually took this one short and long. This was on the VWAP. You see how it's breaking down below the VWAP on a pop out of the box signal with a break below the VWAP. I take it short right here as the institutions are selling. I take it and I get 2 candles and I get out. I get out right here as it started to reverse. I didn't wait. As soon as I got a green candle, I get out. And then I'm watching it again here. Now we go back to blue. Now the institutions are coming in. All right, they're buying it here. So I look at it here and I see it's breaking above the VWAP and the 15 with a pop out of the box symbol. As we switch to blue, I take it long and I ride it up here right to the pivot point and get out. So I made money on the short side, I made money on the long side on that one. Now you're gonna make more money on, if the SPY was long for the day, you're gonna make more money on the long than the short because you'd be trading against the trend. But I wasn't. In this case, I was just trading both ways. All right, and here's another one on the SPY just so you can see it, see if you can identify it. Where's it short? Goes yellow right here. See, green to yellow. Buying, selling, breaking down below the 15. You take it right here. You stay below the 15. You just ride it down until you get a green candle, and you're out right there. We got a couple of questions here. If you were trading on Monday, what time frame do you choose for the trade? When I'm trading the indexes, between market open and about 1 o'clock in the afternoon to 1:30, Linda, I'm taking 0 DTE. I'm taking that day's expiration on the SPY, the Qs of the IWM. After about 1 o'clock, after about lunchtime, I switch to the next day's expiration. And the reason I do that is because I'm not going to hold it overnight. But the reason I do that is because if I get any kind of a pullback or if I get a compression, if I get like a 20-minute or 25-minute compression, the 0 DTEs are going to deteriorate too much because of time decay. So after about 1, I switch over to the next days, basically one DTE. Let's see, get some other questions here. Do I use alerts or scans to find potential upcoming trades? I do use some scans in TC2000 to find individual stocks, but for the For the indexes, I'm just watching them. I'm watching them all day on the platform to find those. But for stock trades, I would have to use a scan, which I do. But for the SPY, the Qs, and the IWM, I can see exactly what's going on because I'm watching them constantly. Does the white arrow print because of the software? You mean these arrows right here? The software produces these not the white arrow. Not if you're talking about when I get into the trade like that. That obviously doesn't do it. No. These are the only things that produced in there. I put those white arrows on. That was my entry and exit. Right. So again, there's some SPY trades here, SPY trades here. All right. So that's how the SPY super system works. And before I get into the regular swing type trades that we take, I'll show you those. 2 questions that can I answer in detail. What is the average profit per trade percentage-wise? Well, I would say, you know, listen, I'd have to go back and add them all up, but typically the average on the SPY super system trades, I would say, if you know, because it depends on what you're paying for the options. But let's say I'm paying $2 for the option, I would say the average win on something like that is going to be somewhere in the neighborhood of between 15 and 25%. That's what your average percentage gain is going to be per trade. Now you're going to get some bigger than that, but you know, if I'm trading today's expiration, I'm going to get a higher ROI than if I'm trading the next day's expiration because they're more costly. So it depends on how much you're paying for them. But the win rate is going to be about 85 to 88%, and you're going to make somewhere in the neighborhood of 15, normally 15 to 20% per trade. Sometimes you get, you know, there'll be more than that. I mean, I've had them run up to 30 or 35%, but I would say that's a ballpark figure. What is the average time in the trade? I would say the average time in the trade, it depends on the market, Omar. In the last week or so, last 2 weeks, because the market's been so choppy, I say the average time I've been in a trade is probably in the neighborhood of about 10 to 15 minutes. That's how fast they were reversing. Now, before that, when we had some good trending markets, I'd say that the time that I'm in them is close to between 30 minutes and an hour. That would be the time frame. And again, the time frame is going to be dependent on if you've got a choppy day in the market and you get a setup, you got to be very cautious to get out of the trade pretty quickly and take your profits. All right? I mean, it's pretty simple. You don't want to be waiting for the thing to reverse on you because these things can reverse pretty fast. So yeah, I would guess, you know, 15 to 20% normally is fairly normal. And in the trade, under normal circumstances, probably about 25 minutes or so, 20 minutes. But recently, in the neighborhood of, I was in a trade today that I was in for about 8-10 minutes. That's all, and it worked out pretty well. But you know, I made somewhere in the neighborhood of about $40 a contract. Oh, Linda, I appreciate that. Okay, so I covered those questions. All right, so that's the SPY super system. And again, this doesn't appeal to everybody. Okay, these are for folks who want to do intraday trades. But a lot of people want to do intraday trades, and we've got a lot of people in the room that do these. But again, you're managing these yourself. I'm identifying for you, but you're identifying and you're trading yourself. You've got to be responsible for getting in and out of these trades. Are in the SPY system. In the money, at the money, or out of the money, zero display options. Typically, what I've been taking, Michael, is an at the money. Sometimes it depends on what the price is and how long I've got for it and what kind of moving I'm getting. If it's a slow moving day where the market's just chopping and I'm taking one of those, I'm going to take one strike in the money. One strike in the money. If it's a fast day where the market's moving fast, I'm going to go with an at the money. I'm on the 0 day options. I'm typically not going to take out of the money. I have tested some out of the monies, and out of the monies do about what you think is what happens. When you have a win on them, you make more money. The ROI is higher, but when they go against you, you lose more money. So my results on out of the money versus at the money or in the money, profit-wise, are pretty much the same. You've been trading options for a long time. The market is not for the faint of heart. You got that right. Listen, this market is brutal. I'd say the last 6 to 8 weeks and I've been trading 15 years, probably the most difficult period of time to trade that I've ever seen. All these gaps, gap and then compress, gap up, gap down, gap up, gap down. It's almost impossible to take swing trades in this market. Very, very difficult. You've got to take very high probability trades that institutions are in that have relative strength and have really good daily charts. I mean, they have got to have beautiful daily charts. It's really, really important that they have really strong daily charts. It's critical. It's critical that those charts are really, really nice short. Like the CNC that we took the other day short, this is a very nice short. You can see this thing is a lot of pressure to the downside. This thing has been coming down for a couple of months, but I'm fairly comfortable taking a short on the CNC. Now, I didn't keep it long. I took it overnight and out, but that's really important on what those stocks are doing. Shopify we took today. We get a nice breakout in Shopify here. See, these are some horizontal resistance levels. I've got beautiful breakout of been compressing for a long time. Beautiful breakout. Here's my volume candles. High volume. Anything that's white or blue is higher than average volume. It's a nice trade with Shopify. That's why we took that one overnight. You've been doing it since 2006. You're really old. I'm pretty old too, and it ages you. But listen, you mean the market is very difficult to trade? You thought it was the one with the, I think that was the one with the problem. Listen, just to kind of get off subject here, I know a lot of retail traders who've given up trading in the last 2 months because they don't have the patience and the discipline to stay with the methodology. Sometimes I'm going to sit here all day long and I'm going to say, don't trade. Please don't trade. Don't trade. Sit on your hands. This is not a day to trade. People don't want, traders don't want to hear that. They want to hear, give me something great. And there isn't anything great. I can't give you a high probability trade if they don't exist. All right. All right. So let me cover. You're asking a question about the cost. I'll get to that in just a minute, Lobster. I'm not going to take any much longer to go there. You've set out recently. Yeah. Listen, I say this in the room all the day, and I have to. I even sent out an alert to a message to the alert service that we haven't taken very many trades. There's a reason for that. I don't want to give you a bunch of losing trades. This is what I'd have to do in this market. Okay, here's some charts of recent trades that we've taken. These are high probability. Now these are trades off of the daily chart. This is the daily chart. Again, it doesn't look like this anymore. This is gone. This is turned into the oscillator. But here's Palantir on a daily chart, and you can see here it's compressing, but the institutions are buying it. But on the current daily, we go from yellow to blue, back to yellow. This is selling, buying, selling. Bam, we go to red. That's buying. The institutions are coming in. We take it right there, and we'll get out 2 days later for 31% profit on some calls. Twilio, same thing. This was a nice compression. We take it right here. As it goes yellow, it goes green. The daily's been green all along. This goes multi-time frame. This is kind of gives you a pause because it's flipping back and forth on colors, and that's because the market's just chopping. The stock is just chopping, but we took it here, and we were in for 2 days in this thing with a call debit spread on that one, Twilio. Lulu, here's a big gap down at earnings. I didn't take it off of earnings. I wait for it to come to see which way it's going to go. See, it comes across here, and now notice it breaks to the downside right here. See, this goes from blue to yellow. It gives a little bit of buying there, and then we go to selling, and it's everything else is already selling, current time frame selling. We take it right here, and we stayed in this just overnight for in at $1.92, $192 a contract, out for $3 a contract. Pretty nice one. MDT, another nice swing trade here. Again, this went yellow to blue, current time frame. Multi-time frame was already green. The institutions were buying it, but there was a little bit of chop here. Here we take it, and we took 25% on that swing trade right there. BKTX, nice one here. Big pop. Everything's green. We take it here. This was kind of a chase, actually, because of this big candle, but we did make 30% on this thing, on BKTX. That's a biotech. Biotechs, by the way, don't follow the market that closely. You don't have to worry too much about what the market's doing when you take biotechs. Biotechs, they march to their own drummer. They're based on what they've got in the pipeline, what the FDA is going to say about the things that they're probably the one trade you can make with that you can go long if the market's just chopping around or going it's bearish. You can still take the biotechs whatever direction that chart tells you to. Overnight trade here on McDonald's, Again, break out of this shaded area is called a dynamic compression zone that the SPY super system creates and tells us that it broke out of compression. It's all green. You can see that they're buying the heck out of it here. Even though they're buying the heck out of it here, the price isn't moving much. But once we get a price move out of compression, that's what we take it. Again, just overnight here on this, in at 11, in at 8:30, out at 11:30, $3 of profit per contract. Okay. Amazon, this is a 5-minute chart. This was an intraday trade that we took on Amazon. These are not Heiken-Ashi candles that I'm showing Dave. I switch back and forth on those, but I take them in the daytime. I look for them in the morning, or I mean in the daytime when we're trading. Then I go ahead and use Heiken-Ashi candles when I'm looking to enter and switch to regular candles. But these are all regular candles here. All right, so here's was Amazon. You can see we're coming across the 15. This is one of our support resistance levels. We buy it right here as it pops above the 15. We take it here out of this pop out of the box, and we're in this thing for 45 minutes. We ride it up, and we take profits in it. Again, you see how it went from yellow to green. This was already green, but this is what we're interested in on the 5-minute chart if we're intraday trading. Just like we intraday trade on the indexes, this is what we want to see, green or blue right here. ENPH, a nice short here. See this compression? Everything, institutions are selling the heck out of this thing. It's breaking down below the 15. See this pop out of the box symbol? We take it right here, and it pulls down. We're in this for an hour for 20%. This was a Verizon trade that we took for 50% profit, which is shocking, but I was able to get these contracts for $45 a contract at the money, and we get out for $67 a contract an hour later on this Verizon. Verizon usually doesn't move this much, but the system told us that they were selling the heck out of it, so we took it. This was Tesla. We took this overnight. This was what I noticed here. This has a pop out of the box symbol on the 5-minute chart, and it was bearish. You see how bearish it is? Selling, selling, selling. So we took a shot and took some puts overnight. Stock went from 120 to 112. That's kind of a lucky break when you get something like that. Okay. All right. So that kind of covers it. It kind of covers the charts. I don't want to just keep showing charts. I think I was trying to explain the methodology we use and how we're using these criteria to identify when institutions are in the trade. That's the most important thing. Again, so here's what we use: straight calls, debit spreads, time spreads, again, to collect. This is non-directional. We only kind of trade I take over earnings is non-directional. I use the weekly ATM strategy, which is selling puts on a weekly basis against a stock that's neutral to bullish with a longer term dated put to protect myself, credit spreads, and then the SPY super system. And I do use straddles and strangles sometimes, by the way. Those are non-directional trades. I do use strangles and straddles if the setup is correct. All right, so we'll just kind of cover what we talked about and what you can get. This is for the they've actually bundled these together. They used to have the trading room and the alert service was separate. Right now they're actually offering the trading room and the text alert service together. Right now, if you want to take a trial, then it's going to switch you over to a quarterly if you stay in to $3.96 a quarter. But you're going to get the text alerts, you're going to get the trading room, and you're going to get this videos that I produce. They call it the Wise Way to Trade Options. Basically, it's a whole bunch of videos, about 30 videos on trading the strategies we have. I go over the compass system or the SPY super system. I go over the indicators. I show you how to trade time spreads, debit spreads, and all of the strategies that we use. A fairly long one on trading the SPY super system. So that's a 2-week trial, but you can cancel it. It doesn't cost you anything, and then it rolls you on the end of 2 weeks to the quarter. But if you want to take an annual access, this is what you would pay yearly right now for both of them, the room and the alert service. And that's going to give you the alerts. It's going to give you the trading room. It's going to give you access to a private Discord chat community. We have 2 other professional traders in there that add a lot of value to the room. And then, of course, the videos we talked about. That's $11.96. Now, you don't get this with a trial. With the trial, you're going to roll to the quarterly. And then you have a one-time payment if you want to just not have to deal with resubscribing every year. $24.96 forever for the room and the alert service and the options and the videos. All right, so that's That's the trading room and the text alert. Now the software, the SPY Super System software, this is the actual software that we showed you that runs on Thinkorswim. All right, that's the Compass Trading System Access. That's going to give you the software. It's going to give you multiple scanners that we have. It's going to give you the masterclass and one way to trade options, my 30 videos. They'll install it for you. They'll put it on your machine. You don't have to do anything. They'll install it, and it's going to look exactly like mine. They have my layout. So when you take it, they'll install it on your Thinkorswim platform, which you don't have to trade on. You can trade on any platform you want. I do not trade on Thinkorswim. I trade on Tradier, but I have the software on Thinkorswim because that's where the indicators work. And then you'll get a month in the options trading room and a month of alert services if you buy the software. And this software will allow you, of course, to identify SPY Super System trades outside of being in the room. If you're not in the room and you've got the software, you can trade the SPY Super Systems on your own. Or you can do a one-time payment for $19.98, which is really a good deal. $500 different forever. And again, you have the software and all of the other things that we talked about over here, except you get 3 months in the trading room and 3 months of the alert service. All right, but this is the software for the SPY Super System, and this is the alert service and the trading room bundled together. Both of them bundled. They used to separate it. They may separate it again. I don't know. But right now, I think this really is a really good value because you're getting the alerts. That way, if you're not in the room, you're still going to see all of the high probability trades that we alert on. And if you're in the room, you can actually take SPY Super System trades because I'll have I have the platform up all day with the SPY Super System up there, indicating the trades that we want to take. All right. Now there should be a link, by the way, in the chat box to the subscriptions. Yeah, there's a link in the chat box to the text alerts and trading room, and another one for the SPY Super System trade, the software that you would get. Okay, let's see. Any other questions here? AE, you like my transparency with losing trades? Yeah, I try to emphasize that. I try to be very transparent. I have losing trades. Everybody is losing. If anybody tells you they never have any losing trades, I don't think I would. I'd listen to them. I do have a win rate close to 90% overall, but you have some bad months, and I do have losers, and I tried to show that so that everybody realizes that this isn't. Trading is difficult, everybody. It's not easy. Omar, which program should you get? I don't have time to be in the computer all day. If the trades only last a few minutes, I can't be on the ball and get in and out within minutes. Yeah, if it depends on how, if you want to be in the room, first of all, if you get the software, you're going to be able to trade these yourself for any time that you happen to have access that you want. You can be watching the chart yourself on the Thinkorswim platform with the SPY Super System set up, and you can trade them when you are available to. I have a lot of people who can't be in the room all day, obviously, but I have people that come in for an hour or two in the morning or an hour or two in the afternoon, and they will trade the SPY Super System when they're in there. And if we come up with a swing trade at the same time, they'll take that and they'll get alerted on it as well. But if the trades only last a few minutes, you have to be there. But again, if you're trading yourself, if you're in the room and we enter the trade, you can take it then. If you have the software, you can take it whenever you have availability to look at that. Perry, where are those links? They're in the chat box. If you open the chat box, there'll be a link right there. One for the text alerts and trading room, and one for the software. If you have any questions, just call Rory. Again, right here at 786-732-4656. He'll take care of you. He'll answer any questions that you might have relative to the purchases of the software and the text alert service in the trading room. So I hope I was able to help everybody a little bit with the Heiken-Ashi. I try to add some value to the webinars when I do these. A lot of places do webinars, and it's just a sales webinar, but they talk about the strategies. But I try to instill a little bit of additional education, like the Heiken-Ashi candles, that you can use whether you buy something or not. I mean, that's the whole point here. We really want to. I try to educate all day long. I'm in the room all day long, answering questions and just pointing out trades and going over methodologies. So hopefully we'll see some folks in there. So hopefully we'll see some folks in the room tomorrow on the alert service. Thank you so much for attending the webinar. I appreciate you giving up your time here on a Thursday evening, and I hope everybody has a great evening and be back on Friday. Can you show me what an alert to enter trade looks like, and what an alert exit trade looks like? Yeah, I can. Let me show you. Well, I don't have an alert here, but basically this is what they look like. All right, so these are the trade rooms right here. This was one we had the other day. HIMS. What you're going to do is it's going to say the date's going to say HIMS by February 21st, 41 calls for 560, sold them for $7. This is a CNC we took. Buy the 59 put, sell them for 3. And when you see this sold here, I would have sold it. I would have sent an alert out to tell you to sell them. In the room, I just posted. But when we put this trade in, you would get another alert saying put a sell order in for $7. And here's a shop trade we took today. Right now, by the March 7th, 121 calls for $9, and I haven't put a sell order in it yet. I'm going to wait to see what this does. Okay, that's what they're going to look like. Okay, thank you very much, everybody. Appreciate it. I like great questions. I appreciate everybody attending. Thank you so much, and I look forward to seeing some folks in the room and on the alert service. And again, that software is one great piece of software. I'll tell you, it made a big difference in my trading. I went from 82% win rate to 88% win rate just based on that SPY Super System software by staying out of trades that institutions weren't in. All right, everybody, have a great night. Everybody have a good dinner. I'm getting ready to have some to eat. I'm here in Charleston, South Carolina, by the way. And so we, in fact, my wife is, by the way, is in Vietnam right now on a trip with 3 of her girlfriends. And I have 2 traders from in Vietnam in my room. they trade from 9 o'clock at night till 4 o'clock in the morning. All right, everybody, have a great evening.